Hello and good afternoon. I'm James Preston reporting live from Sydney for Kalkine TV, and this is the Mid-Market Pulse show, where we take a look at how trading has unfolded to date for the day. Australian shares continue to remain under stress into the mid-session, tracking weak cues from Europe and the US markets. Looming fears surrounding the rollback of COVID-19 stimulus measures hammered interest rate-sensitive tech stocks. The rising bond yields also dented market sentiment as it reignited concerns about rising inflation. The correction in commodity prices amid worries over production curves from China also left investors jittery. The benchmark index, the ASX 200, was trading 1.5% lower by lunch. The index opened 0.52% lower today, tracking negative cues from the US stocks, which closed lower in overnight trade. The Dow Jones Industrial Average took a hit of 1.63%, while the S&P 500 shed 2.04%. The Nasdaq Composite plummeted 2.83% amidst a tech rout on rate hike concerns. Back home on the sectoral front, 10 of the 11 sectoral indices were trading in negative terrain as investors lost their risk appetite. Information technology was the worst performing sector, with a 2.2% loss, tracking an overnight fall in the US counterpart, the Nasdaq Composite. Tech stocks in the US nosedived as anxiety over the US Fed and whether it might raise interest rates led to a spike in the bond yields. Materials, healthcare, telecom and consumer discretionary spaces all witnessed a surge in selling, falling by 1%. Energy, industrial, financial and A-REITs were also reeling under selling pressure. On the COVID-19 front, New South Wales reported 863 new locally acquired coronavirus cases and 15 deaths in the past 24 hours. Victoria's daily case tally surged past New South Wales for the second straight day. It continued to register a spike in daily cases with 950 new cases and 7 deaths on Wednesday. This is the highest number ever recorded in a single day since the pandemic began and the highest number of deaths in 24 hours reporting throughout the last year. Let's now turn our attention to the performance spectrum so far today. The top loser on the ASX pack was investment management group Pinnacle, which fell by 6.4%. Some of the other notable losers were mining infrastructure services firm Mineral Resources, resource company Iluka Resources, steel producer BlueScope Steel and tech firm Codan. On the gaining side, gold miner St Barbara topped the gainers chart by rising 4.3%. Some of the other top gainers were gold producer Silver Lake Resources, Regis Resources and Evolution Mining, as well as energy firm AGL Energy. On this note, let's move on to stocks that are grabbing headlines today, beginning with Crown Resorts. The entertainment, wagering and hotels business dropped 1.6% by the mid-session. The casino giant has appointed Anne Ward as a new independent non-executive director to the board in an effort to lift its corporate governance credentials after 3 damaging royal commissions. Ward is the chairman of the ASX-listed e-commerce group Redbubble and communications software provider M&F Group. Our next stock in focus is energy infrastructure business APA Group and peer company AusNet Services. Shares of APA Group rose over 1% after it extended its proposal to acquire all the issued shares in AusNet Services. AusNet shares were trading down by 0.2%. APA Group had proposed to acquire all the issued shares in AusNet under a scheme of arrangement for $2.60 per share in cash and shares. However, the proposal was conditional on confirmation by the 28th of September from AusNet for due diligence access to APA. And now it's time for a very short break, but stay tuned to Kalkine TV as we'll be back in just a moment with more trending market updates. Are you sick of paying through the roof for a product that doesn't truly suit you? Want to make sure that you get the best deal possible? Then let us help you. At Kalkine, we do the research, run the numbers, and take a look at the true value of the product to make sure that you're informed as a consumer. Whether it be the best streaming service to suit your binge-watching desires, the right broadband and NBN plans to ensure a no buffering experience, saving money with your energy, gas and mobile plans, or treating yourself with a bit of retail therapy. We will break down all the details about every single deal. What's in it? how much it costs, and whether it's worth it for you. If you want to save money and stay informed, then subscribe to the channel and press the bell icon, as we will be rolling out a stack of content to keep you in the know. Thanks for joining us on Kalkine TV for the Mid-Market Pulse. I'm James Preston. Let's continue our deep dive into stocks that have grabbed market attention today, beginning with Smart Group Corporation. The stock price of the company rallied over 17% after it received an indicative, non-binding proposal for the acquisition of 100% shares through a scheme of arrangement. The consortium behind the proposal comprises of TPG Global and Potentia Capital, which also seeks Aware Super to become an equity co-investor. If the deal succeeds, the Smart Group shareholders will receive total cash considerations of $10.35 per share, reduced by a dividend or return of capital paid before acquisition. The proposal provides a premium of 31.7% to the closing share price of Smart Group on Tuesday, and 38.6% of the 90-day volume weighted average price until Tuesday. Shares of Big Tin Can dropped over 3% after the software solution provider secured a contract worth 2 million Aussie dollars with phone insurance provider Assurion. The company stated that Assurion channel partners across North America will use Big Tin Can software to deliver training, communications and mobile content based on partner types and roles to help those partners be better equipped to sell Assurion products. In addition, Assurion expects that Big Tin Can's holdings would be deployed to up to 50,000 Assurion distributor users via the agreement. Up next is food and staples retailing giant Woolworths Group, who has successfully priced $350 million of senior unsecured six-year notes and $350 million worth of 10-year notes under its medium-term note program. The notes are denominated in Australian dollars and were issued to Australian and international institutional investors. As a result, they did not qualify for retail investor distribution. Following the announcement, shares of Woolworths were trading marginally lower. And lastly, gold mining and exploration company Kirkland Lake Gold has entered into a merger agreement with the company Agnico Eagle Mines. This will be a merger of equals with the combined company under the name Agnico Eagle Mines Limited. After the completion of the merger agreement, the company is likely to have a mineral reserve base constituting of 48 million ounces of gold. All right, well, that's a wrap for this show. Keep watching Kalkine TV for more trending market updates from across Australia and around the world. I'm James Preston, signing off for now.